This is Funder. When you subscribe, you turn knowledge into money. Today we step out of the fog and into the truth. Housing, rates, growth, inflation, non-performing loans, the two-speed split between exporters and everyone else, the policy risks ahead of an election year, and the next 12 months that will shape every household and every business in this country. To guide us through it, we have someone who does not rely on headlines or political noise, someone who reads the data with a cold eye and sees the turns before the public feels it. Jarrod Kerr, Chief Economist at Kiwibank. Jarrod, what's your outlook for the property market into 2026? Stabilization, slow grind up, or another leg down?
So I think we've seen stabilization. We had property prices drop nearly 20% across the economy, and then they've just gone sideways for the last couple of years. I would say things are stabilizing. We are seeing sales starting to pick up, and where sales go, prices tend to follow. There is a lot of stock on the market at the moment. There's a lot of supply. So we need to work our way through that. But those sales, that lift in sales, we think will fuel house price growth next year. So we're thinking 2 to 3% in 2026, maybe a little more 2027. Psychologically, that would be very important for many business owners who have a house linked to their debt, but many households who have mortgages on their property. It's a big boost to their confidence, just knowing that house prices are going up, not down.
If housing doesn't reignite, what becomes New Zealand's main growth engine?
We've got many growth engines, and we do like to look at the housing market and say, oh, it's the be all and end all of the New Zealand economy. It's not. It's a big part of the recovery. It certainly helps. But when you think of growth, for me, it's small to medium businesses. You want to really crank things up. You get small to medium businesses going, and you watch and see how the economy grows and grows really well. If they're investing more and they're hiring more, then that really does feed through to much higher rates of growth in the economy. So, fire up the small to medium businesses in this country, and you'll get some fantastic growth.
What are you seeing in non-performing loans, mortgages, business lending, and agri? Where is the stress most concentrated?
Yeah, well, luckily this time around, it's nowhere near as bad as, the GFC. That was a proper banking crisis. That was a really bad one. The non-performing loans that we've got at the moment are well south of what we've seen in previous recessions. So it's been, quite interesting that businesses and households have managed to hang on. We have definitely seen a lift in non-performing loans and a lift in stress. You get that when interest rates rise as fast and as high as they did, and you fall into a recession. But the provisioning that we've put aside, we haven't had to use. So it's really been quite manageable, which is great. So yes, mortgage-related stress up. Business-related stress up, but not to levels we worry about. What we've actually seen is a lot of farmers pay down debt really rapidly. So we'd started to see agricultural loans defaulting, and then these big payouts came, and bang, the non-performing loans for our farmers have just dropped meaningfully, which is good. And they've paid down a lot of debt the last couple of years. So we've actually de-risked a bit, I think, as an economy. And that's a good place to be.
You've described the two-speed economy, exporters doing well, domestic struggling. Is that still the core New Zealand story heading into 2026?
Yeah, I think so. But we're thinking that we see more of that, export earnings going throughout the economy than what we've seen. So what we've noticed is that farmers have received a massive payout and they've run down debt. We only do that for so long, right? And then you start spending. And you can see in different parts of the country where in the South Island, so Canterbury, Otago, Southland in particular, are doing really well. Farmers in the South generally have larger farms, more established, and a lot less debt. So we are seeing the payout going further in the South Island, whereas farmers in the north, say in the Waikato, for example, are little smaller the farms and more debt. So they're the ones that have probably got a little bit further to go, but then eventually they'll release and spend more on maintenance and throughout the economy elsewhere. So it's a big part of our story, that export story, but it's not just agriculture and farmers. It is our manufacturers. The fall in the currencies really helped them, and they're, I think, starting to grow at a better clip as they're exporting stuff into Australia, for example, which is a stronger economy with stronger demand.
Most people treat their KiwiSaver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you want clear, simple guidance on choosing the right provider and the right type of fund, you can talk to Wealth HQ without paying a cent. Maybe you like the thrill of crypto. Maybe you want nothing to do with investments that profit from conflict. Maybe you just want a sense of control over where your money goes. Wealth HQ strips the uncertainty out of the process. If you want to understand your options, then click the link below and it will take you there. 2026 is an election year, policy environment. Like, what policy settings materially change the macro outlook for better or worse?
Well, for better, I would hope we see more on the infrastructure front. I mean, the government is doing more, but I would suggest that if they're really wanting to kick into next year, they could really push the boat out on infrastructure, and they need to explain to the New Zealand public that there is a difference between OpEx, so what they're spending on, beneficiaries, for example, versus what they're taking in on the tax side, and then there's CapEx, and it's the CapEx that can be easily funded by increasing debt a little bit, and it's got to be long-term investment. So two very different things. We don't tend to split it out, but we need to split it out and say, hey, yes, the government needs to rein in their spending over here to try and generate surpluses, but over here on the infrastructure investment, there's a lot more that they need to do. So that's the good stuff. And then, of course, we'll be arguing around capital gains tax and other things as Labor comes to, campaigning on lifting taxes.
If you look around the world, you've got to see what is going to be palatable for the right side of the house. And if you're looking at the Treasury's latest report, it doesn't look good for New Zealand and something has to be done.
Yeah, we do need to generate more taxable income. If we're going to deal with an aging population, in particular, most countries have a capital gains tax. Australia has one. They put one in the 80s. The government doesn't generate a lot from it, but that's because you're allowed to write off so much stuff in Australia. So, first of all, a capital gains tax is a gain. You've got to make a gain first before you get your tax, and it'll start from 2027 onward. So we're not overly worried about that derailing the housing market or the economy. And when I say that to investors, they turn around and say, yeah, okay, fine. But, Labor's not going to stop there. It's going to be a wealth tax. It's going to be this. It's going to be that. And the next thing. So, if we're just talking capital gains tax, I'm not worried. But if you start talking all these other taxes, then that is what is really scaring investors.
Zooming out to risk markets, crypto has been a lightning rod for liquidity and sentiment. Do you treat crypto moves as real macro signal trends or mostly just noise?
Um, for me, mostly noise. And they don't trade as currencies. Look, I think we need to make that clear. Like, they're not currencies at the moment. They're speculative assets. You are not buying Bitcoin so you can go down to the local dairy and buy some milk. You're buying crypto because you think that it's worth $1 million, and you piling in expecting some massive return. You might get it, but the point is, it's not. You're not using it as a currency. You're using it as a speculative asset. In order for these things to truly work, I think they need to become currencies. And we're still, a while away from that. I don't know how we end. I think central banks are very aware that they might start losing their grip on currencies, and we're hearing a lot about stable coins now. So exactly how all that plays out, I don't know, but I'm not getting a lot of signal from Bitcoin being up or down. I don't see a dumping of dollars. Let's put it that way. So if Bitcoin was to truly take over the world, you'd see, a big dumping of dollars and euros and other things, and people actually moving into Bitcoin to transact, not just punt.
Give us your base case 2026 in 60 seconds. Growth, inflation, OCR, New Zealand dollar, the housing and jobs. Where do we land in 12 months' time?
So our forecasts have, the economy growing closer to 2% by this time next year. So that would be a decent recovery. We have inflation falling below 2% to about 1.8. So that would be a lot more comfortable for everyone. We have wages kind of moderating to about 2.5 to 3. So long as wages are running above inflation, you're going to get some real gains in income, which we haven't seen for 4 or 5 years. So the last 4 years, you've seen inflation running well above incomes, which means you're going backwards as a consumer. Hopefully, we start moving forward again, because that's a big part of the recovery, and we've got that sort of forecast. And then, hopefully the New Zealand dollar's trading around where it is now, so still providing stimulus to our exporters. Have a housing market rising 2-3% in the background, supporting confidence. I think a lot of the data, a lot of the news will be better next year than what it is now.
Hopefully, Kiwibank gets that raise through and becomes a more impactful player in the business market.
Oh, absolutely. I mean, if we get that money, that capital injection, that'll put us on steroids. It really will. It'll enable us to have a lot more fun. We have done a lot in the last couple of years, particularly in business banking. Like, we've really pushed the boat out there, and we've doubled our business bank in a very short period. Small bank, but we've doubled it. And they're looking to double it again. So there's plenty of appetite, particularly in business lending and mortgage lending, because we're trying to grow. We're trying to eat into those Aussies.
Jarrod, appreciate your insights today. You're Chief Economist at Kiwibank. You've always got good insights to share from all the events you do around the country. We'll talk again soon.
Pleasure. Thanks.
Most people treat their KiwiSaver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you want clear, simple guidance on choosing the right provider and the right type of fund, you can talk to Wealth HQ without paying a cent. Maybe you like the thrill of crypto. Maybe you want nothing to do with investments that profit from conflict. Maybe you just want a sense of control over where your money goes. Wealth HQ strips the uncertainty out of the process. If you want to understand your options, then click the link below and it will take you there.